Guggenheim Securities Vice President Ron Yesakov in a note saying Tesla's charging partnerships could prove profitable, but not enough to justify the stock's current price. He joins a group of Wall Street firms skeptical of sky-high Tesla shares and skeptical if they're worth their hefty price tag.
Yeah, we put out a note earlier this week for clients kind of outlining the charging business going out to 2035 and looking at the number of electric vehicles we expect to be on the road, just close to 80 million. And what market share Tesla will have, which we think is 50% plus.
As you all may know by now, Tesla has been on a winning streak lately, as the stock has been buoyed by a slew of good news for the company, mainly because of its supercharger network and because of the recent artificial intelligence craze. Early this month, Tesla investors who stuck with the electric vehicle maker through a rough ride were met with a rush of good news for the company due to the return of bullish market convictions that have put the stock on pace to more than double this year. The leading EV company has added more than $194 billion to its market valuation in an 11-day run, as the shares tied with their longest ever winning streak. It is only the second time in Tesla's history that the shares have managed this feat. Tesla has been a wild stock over the years, but it has only posted 2 other double-digit winning streaks in its history, according to Bespoke Investment Group. The first was 10 trading days ending in April 2020, while the second and the longest one was in January 2021. Around mid-June, Tesla shares closed up 4.1% at $244.40, bringing this year's surge to 98%. That week's 14% advance was the best since January.
2 weeks after its competitor Ford said it would strike a deal with Tesla to use the NACS Tesla charging standard, GM is now saying that it will do the same thing. So starting in 2025, it will be incorporating the Tesla NACS charging standard into its EVs so that GM EVs will then be able to charge at Tesla supercharger sites.
The sharp rally came after General Motors Co. said it will adapt its EVs to Tesla superchargers, following a similar move from Ford Motor Co. and all but ensuring it will become an industry standard in the US. More people buying EVs increases the likelihood that they buy Teslas. RBC Capital Markets analyst Tom Narayan wrote in a note, "A rising tide lifts all boats, and if consumers see their neighbor having an EV, they are more likely to buy one themselves. And this increases the chances they buy a Tesla." And just a few days ago, Rivian joined General Motors and Ford in announcing it had signed an agreement with Tesla to provide Rivian drivers access to Tesla's supercharger network across the United States and Canada. What's more, Tesla announced it will require electric vehicle charging companies to include both Tesla's North American Charging Standard (NACS) and the Combined Charging System (CCS) standard to qualify for a state program to electrify the state's highways using federal dollars. The decision by Ford, GM, and now Rivian to adopt NACS changed requirements for Phase 1. Each direct current fast charge port will be required to have one CCS connector and one NACS connector, the Texas Department of Transportation told Reuters. Shares of Tesla are up 154% year-to-date, 45% in the past month, and were up 1% in pre-market trading a few days back. In contrast, the technology-heavy NASDAQ Composite is up 30% year-to-date, and the S&P 500 is up 14.8%. In light of this, Wedbush Securities said it maintained an outperform rating on the stock, with a $300 price target, citing several supercharger partnerships. The sum of the parts story for Tesla now further comes into play with its supercharger network, energy business, AI-driven autonomous path, unmatched battery ecosystem, adding to the Tesla golden EV success story still in the early days of playing out with customers. Wedbush Securities analyst Dan Ives wrote in a client's note, "It also helped matters when all of Tesla's Model 3 sedans became eligible for the full U.S. tax credit a few weeks ago under new criteria set by the U.S. Treasury Department, while Musk's social media platform Twitter got a new chief executive officer, calming some investor angst about Musk being spread too thin among his many high-profile ventures. The other factor that has pushed Tesla shares up is AI. Marco Lacchini, senior vice president at Vanda Research, told the Wall Street Journal that small shareholders have bought into Tesla and the AI theme at broadly similar times over the past year. This further fueled an already buoyant sentiment for technology and mega-cap stocks and pushed the S&P 500 index into the bull market territory. Though the jury is still out on whether Tesla's rich valuation allows for any further AI-related boost, or if even the self-driving tech it is building can be equated with the generative AI trend, the stock has undoubtedly caught the fever. We think the market wants to believe Tesla is an AI name first, an auto company second, Morgan Stanley analyst Adam Jonas told the Wall Street Journal. Although the stock has soared enough to make investors happy, others decided to look the gift horse in the mouth. As many know, when stocks soar, they risk becoming overvalued, so some are wondering if Tesla shares reached that point. In recent days, Tesla shares seem to mostly move upwards. In total, Tesla stock is up an astounding 49% over the last 30 days. With such a sharp rise, shareholders are in the bittersweet position in which they're likely extremely pleased with their gains, but may have doubts about whether or not they should continue to hold shares of the stock. Tesla's momentum has persisted into 2023, with first quarter deliveries rising 36% year over year. Tesla's more affordable fully electric cars produced in increasingly higher volumes with access to a shared charging standard sounds like a recipe for a tipping point toward more meaningful mass market adoption. However, despite some good reasons to be bullish on Tesla's business, the stock's valuation is a concern. With a price-to-earnings ratio of 79, investors are pricing in strong business growth for years to come. While recent underlying performance suggests the company can live up to this valuation, the automotive industry is extremely competitive. Investors should leave room in their valuation models for the risk of the capital-intensive and highly competitive automotive industry leading to potential problems in the future, including the possibility of Tesla's earnings not growing as fast as anticipated. According to investment research and stock analyst company New Constructs, the market's expectations for the time Tesla can maintain an edge over competitors, evidenced by its ability to earn a higher return on invested capital than its weighted average cost of capital on new investments, are simply too bullish. The firm calls this duration in which a company can sustain a lead over competition a growth appreciation period. New Constructs believes investors' expectations for Tesla's growth duration period are too optimistic, leaving significant room for error in the market's forecasts. While this is just one analyst's opinion on the stock and investors should do their due diligence, New Constructs does bring up a good point. The current price for Tesla shares bakes in some incredibly high expectations from the business over the long term. Because of this, some believe that it may be wise for some Tesla shareholders to sell some of their shares with the valuation looking expensive. However, for the same reason, some investors are waiting for the stock's price to drop so they can buy more shares. So, why should you own Tesla shares? For one, Tesla has already established itself as the market leader in electric vehicles. In 2022, it delivered 1.3 million cars, up 40% from 2021. That's a remarkable figure considering the number of EVs sold by its rivals in Detroit. In comparison, Ford, the second largest EV player in the US, only sold 61,575 electric vehicles in 2022, while General Motors, the largest US automaker, only sold 39,096. That said, to say that Tesla is the market share leader is a bit of an understatement. Given that the U.S. electric vehicle market will benefit from greater tax credits due to the Inflation Reduction Act of 2022, total demand should be a big tailwind for Tesla. The company sold nearly 423,000 vehicles in the first quarter, with projections for total sales of 1.8 million vehicles this year. What's more, Tesla's product line is expanding. Before, Tesla had a big missing link in its auto lineup since it doesn't sell a pickup truck, which is about to change as the company's long-awaited Cybertruck will begin rolling off assembly lines this fall. According to Electrek, the first Cybertrucks are expected to trickle out of manufacturing plants in August, with official production beginning by October. Further, Tesla, unlike other EV companies, has other options. Tesla also has other valuable assets, including one of the nation's largest solar companies and Megapack's emerging battery storage solution for utilities, and is even experimenting with a humanoid robot it calls Optimus. Overall, a premium valuation isn't abnormal for fast-growing companies, and Tesla is undoubtedly growing more quickly than legacy rivals. However, nobody is going to mistake this stock for a value play. That said, those worried about valuation should invest elsewhere, particularly given Tesla shares are notoriously volatile. Still, Tesla stock has enjoyed a renaissance as of late. After falling sharply in 2022, the company shares rebounded in 2023, more than doubling from their lows in early January. The company is one of the largest technology companies in the world, but it's also one of the most polarizing because of its controversial CEO, Elon Musk. Hit the like and subscribe button for more.